Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, James of the Chart Guys. It is April 18th on a Tuesday. Got to do my nightly video on oil. So, as I mentioned in yesterday's video, we have this inside candle. Get inside candles when the high and low are within the range of the previous day's high and low. And once we closed below the low of this inside candle, the low was 53.24. We had a close at 53.22, expecting more downside, and had some nice follow through today on that bear close of the inside candle when we closed below it. We are currently losing the 8 EMA on the daily here. It looks like we're going to back test it here. Look for a back test, and if we reject, our support we're going to look at is the low of today at 52.54. If we break 52.54, we're going to start looking at the high of this candle, and you can see that this was a big upper wick here. And when strong resistances are broken and they become strong supports usually, so we're going to look at the high of this candle at 52.33 for some support here. Obviously, we have inventory reports tomorrow at 10:30 a.m. Eastern Standard Time. And on the hourly, mention again that the hourly bears are in full control because we're continuing to set lower highs and lower lows. So we have this high, this low, we have a lower high, lower low, lower high, lower low, lower high. So until this trend changes, we're going to continue to be bearish in oil. And you'll know that the trend has changed when we break a higher high. So currently that would be 53.30. We break 53.30, and on any pullbacks, we're going to maintain a higher low above the low of this candle at 52.54. So still a healthy pullback after a big move up on the oil daily charts. But again, we do have that inside daily bear break, expecting further downside here until that hourly trend breaks, where we are setting a higher until we are breaking a higher high, and then on any back test we set a higher low. And some people have mentioned that the daily is a potential cup and handle. That is possible at the top of the uptrend. We do have this cup here, and because the right side of the cup is lower than the left side of the cup, we are potentially creating a handle here. And we'll know if we break the high of this candle at 54.14 to confirm that cup and handle, but that's a bit of ways. So the first technical indicator to use right now for the short to midterm is this hourly chart. And until we set a higher high on the hourly, we're going to continue to look bearish on oil. And once we break that trend, then we'll start looking up at that cup and handle pattern that is potentially forming for the midterm time frame. So have a good night, and I'll see you tomorrow.